Hello everyone, hello traders. Um, Thank you all for joining us for this week's live brief, which is essentially the first one in 2026, right? So I wish you all happy new year, um, and please let us know where are you guys watching us from. Comment in the chat your country or post your flag. Let us know where you guys are watching us from around the world. We have some pretty interesting stuff coming up. First up, let me know if you can hear me well and see me. Right? Hopefully you can hear me better now, or I can speak closer to the mic. Yep. All right. We have South Africa. Hello. Nairobi, Kenya. Hello. Hello, Joyce. I'm not sure what the other green flag is. If somebody can help me with that, I think it's probably Nigeria. No, let me know. Okay. Hello from Bangladesh. Hello, guys. All right. So we already have some comments about some instruments. We're gonna go through them. Uh, Tanzania, welcome. Matthias, yeah. Nigeria, green flag, yes, yeah. So yes, we have some instruments that you guys already requested. I see here gold, pound yen, euro USD. We're gonna go through everything. Later on, we're gonna be checking the charts. We have some interesting stuff to talk about today. We've all seen what's happening with geopolitical tensions once again around the world. We see how the US removed the Venezuelan president. We're gonna see how that affected the markets. And Trump says he wants Greenland now. So, yeah, that's a thing now. So we're gonna go through, as usual, the economic calendar, what's happening with upcoming news. We're gonna be checking the charts, some fundamental data, technical analysis as well, and some earnings for this week. We have major banks. We're entering the earnings season, which is essentially somewhat bullish, usually, especially for stocks. So yeah, lots of stuff to go through. So I think we can begin. If you guys have any questions during the presentation, feel free to post in the chat, and we will address it after the presentation. I want to stress before we begin, anything that I will say today, it's my personal opinion. I do not represent Exness in any way. This is my personal opinions. This is not investment advice. So yes, this is for educational purposes only. All right. Any traits that I'm gonna show later on, it's just my personal opinion. Once again, this is a demo account. It's not a real account. So yes, this is for education and informational purposes only. All right. So I think we are good to start. first up, let's see what happened last week. Was pretty important. We had the US job report. The non-farm payrolls came out lower than expected. Also, the unemployment rate came in even lower than expected. You see here the consensus was to remain stable at 4.5, and there was even some forecast by Trading Economics website to even rise to 4.6, but it came out at 4.4%, which is quite an important piece of data, especially because this is probably the first not real data, but after October, where we had the government shutdown, the data was in a bit of a backlog or not really reliable. We got a lot of revisions after the releases, so probably December data might be more reliable, I want to say. So yeah, and we'll see how it affected the markets. When we also had Canadian unemployment, where the expectation was to rise by just 0.1%, came out at 0.3%, so from 6.5 to 6.8. So right off the bat, we see that the relationship between the US dollar and the Canadian loonie might be somewhat interesting. Yeah, you see this interesting setup. We're gonna discuss later on about what trade we can take on dollar loonie. So yeah, that was an interesting week, and this week we're gonna have later today the U.S. inflation data coming up, where the yearly figure is expected to remain stable, 2.7%, and core is expected to slightly increase to 2.7%. Tomorrow we have Chinese balance of trade, where it's expected to slightly improve. Their trade surplus is expected to increase by almost $2 billion. And same day tomorrow we have the producers price index, the US PPI, for both October and November, where the October figure is expected to remain at 0.3, and depending on what figure we get there, somewhere around 0.3, again expected for November. So not too much of a change there. Producers price index is important because it shows that if it's going up, that means that the costs for the producers, for the manufacturing sector, might be increasing, and therefore usually those costs roll down to the consumers and creates inflation. So it's important because it directly affects inflation. And this is like an early sign, because if we already know that producers costs are going up from, let's say, this month, it's reasonable to expect that we might have inflation affected next month. So it's like an early sign of inflation. It's not the only one, obviously, that affects inflation, but it's one of the early signs that we might get. And also we have British GDP on Thursday morning, where it's for November, so probably might not have such a major effect on the charts, and also the change is just 0.1%, so very minor. It's for November. We are already mid-January, so yeah, might be already priced in. But what's important here is that if we do get a surprise, then we might see some volatility on the British pound pairs. So not important, not major or market moving, right? Because it's so behind. It's for November. But if we get significant variation on the consensus, on the actual figure, then we might see some volatility on the pound pairs, and this is one thing that you need to watch out. Lisa and Biela, yeah, if I'm pronouncing that correct, where you asked about pound yen. So this is one piece of data that you might want to keep an eye on if you're trading pound yen this week. All right, so that's it for economic data or news releases for this week. We have US inflation later today, producers price index and Chinese balance of trade on Wednesday, and British GDP monthly figure on Thursday, right? So not too much to keep up with, right? Compared to last week where we had US job report, we had Canadian unemployment, we had all of these data. All right, so before we go on to charts, let's see what's happening with the FedWatch tool. The FedWatch tool, for those of you that are not familiar with it, is the probabilities of the Fed, that is US interest rates, shifting on their meetings. We see here the meeting dates and we see here the probabilities. Currently, the interest rates in the US is 350 to 375. And for the January meeting, that is 28th of January, we see the probabilities of that interest rate remaining unchanged is at 95%. So it's pretty much overall anticipated that interest rate might not change in January's meeting, and so is for March, right? Currently it's at almost 75%. Of course, these probabilities shift by the day, right? So if we do get some important piece of data coming out even before the January meeting, probabilities might shift, but that's which tool we're using to keep a track on what's happening with interest rates, because it directly affects the dollar and so on. What's important here is that last week the probabilities on the April meeting to cut the rates was the dominant scenario. You see here 43.7% and 42% to remain unchanged. But after the soft NFP of last week, these probabilities shifted, and now the rate cut is expected in June. That's the important piece of data that we can take from the US job report. The expectations of the first rate cut were for April, but after the NFP, it was pushed back to June. From that point on, the probabilities are not that significant for the time being. But yeah, shifting probabilities of rate cuts with rate holds are quite important when it comes to interest rates. And since we do keep a track of interest rates, I mean, this is one major tool that you should be using in your trading strategies, regardless, is the interest rate probabilities. All right, so that's it from the FedWatch tool. What I also wanted to show is that this week we have the beginning of the earnings season, right? If you go to Nasdaq.com, you click on market activity and then earnings. You go market activities and then earnings. You get this calendar where you see which companies are releasing their earnings report this week. So we have big banks, we have JP Morgan, the Bank of New York, some other companies like Delta, Bank of America, Wells Fargo, Citigroup. You get the picture. This week we have big banks releasing earnings. Some also major companies like the Taiwan Semiconductor Company, TSM, Morgan Stanley, also Goldman Sachs. So this week, if you're trading bank stocks, quite interesting week for you guys. There's also BlackRock if you're trading this massive company, but TSM might be one of the individual stocks that some people are trading. Let me know if you are trading these stocks this week, or if you're not, but since you now know that there's earnings, you might start trading them. All right. Now, I feel like I'm going too fast. Just let me know, guys, if you want me to slow down or repeat something, or yeah. Okay, so moving on to some charts. First up, talk of the town, gold all-time high again. What's happening? Like we got new all-time high. Obviously, is not the ideal place to start trading gold right now, because all-time high, not right, not very ideal for risk to reward, especially. So, what's happening with gold? So, first factor that's affecting um, the the gold price is seasonality. If we go on Google and search seasonality chart gold, and just click any of the first results that you get, you see right off the bat that January and February is a period seasonally that we see a big increase or a big spike for gold, right? And if we see here the data for monthly percentage return for gold over the past 20 years, right? That is, we see that January we have 3.6% on average, compared to other months, which is one and something, but January is 3.6. So seasonally, the pattern here is that January is a good month for gold, regardless of what's happening, right? So that's one of the reasons. Which tool commitment of traders report? Yeah, we're gonna go over those. All right. So and also interest rate expectations affect gold prices, because markets are pricing, if markets are pricing in multiple Fed rate cuts in 2026, that is, then lower expected interest rates reduce the opportunity cost of holding gold, which is non-yielding asset, right? So that makes it more attractive. So lower interest rates tend to boost demand for gold. And we also have central banks buying and ETF inflows, as well as probably one of the most important reasons is geopolitical tensions. When we have uncertainty, people tend to shift to gold, therefore increasing demand for gold and therefore subsequently increasing its price. So that are some of the factors fundamentally that pushed gold to new all-time highs. From the technical perspective, there's nothing significant or worth telling about any reversal signs. For example, the only thing is the overbought stochastic oscillator, but as we've seen multiple times in the past 5 or 6 months, when it comes to gold and gold demand, lately it's not that significant. I mean, we've had extreme overbought stochastic oscillator for how long is that? August until October. So we had 3 months of continued overbought indication on the stochastic oscillator, and the price just kept going up. So when it comes to gold, especially at this point in time, the stochastic might not be that significant, or any indicator that shows overbought or oversold conditions, because it's mostly the price action is mostly based on fundamentals rather than technicals. So the fundamental factors that affect gold will push the price to the upside, and the technical image will show extended periods of extreme overbought conditions. So you cannot really use the technical image to do any trades for gold right now. I know for some people this is not ideal, because probably you are mostly trading gold, and being in all-time high is quite risky. So my personal opinion on gold for at least this week is just wait it out. Either go to lower time frames and try to find some setups to trade gold, but then again, the risk to reward might not be that good. So probably just stay away from it for now. Find something else to trade if you want to trade 100%. But yeah. Yeah, Joyce, silver is exactly the same image, right? Silver is affected mostly because of gold being so expensive, right? One of the factors, at least. We had some big gap on silver, which I don't remember the last time we had this big gap on silver. I mean, if I go back, I don't see anything like that. So big gap shows that volatility is too much. So buyers and sellers cannot come to a deal, and we get this gap in price, which is quite big by end of the year of 2025, right? Then we had some, you get a gap and you expect, wow, volatility is so great, the price should continue moving up, right? No, we have big correction candlesticks here, and then again some bullish action. But again, same concept as gold. It's in all-time high. It's pushing the upper band of the Bollinger Bands. That means that volatility is super great for silver, but that does not mean it can be super profitable. It might get big corrections to the downside, as we had close to the end of 2025 here. So imagine trading here after the gap, and then you see these monster bearish candlestick forming, and you're like, what happened? We had volatility going up, we had a bullish gap, what happened? Anything can happen. So yeah, volatility does not always mean that you get big boost in the direction that you want it to. So silver and gold, kind of similar setups. On the chart, it's both in all-time high, so risk to reward is not that great. So for me, gold and silver are out of the question for this week. All right. Okay, so before we continue, let me just answer a couple of questions here. Which tool you recommended watching the interest rate? Yes, this is the Fed Watch tool. If you go on, let me go on Google here. Okay, if you search Fed Watch tool, right? It's the one from CME Group. It's usually the first link. So if you click there, this is the screen or chart that you will first look. You can play around, see what other stuff you can get from here. You can compare different periods. You can go to historical, where you see exactly almost daily how the interest rates changed, right? Some people find this somewhat confusing, so that's why I don't like to using it in my presentations. I usually use this chart, which is very clear and easy to understand. All right. Now, commitment of traders report. Let's see what we can find. No, sorry. Which one? Bar chart. Yeah, I like to use the one in on bar charts. Again, it's very easy to understand. Let me go to let's check on gold. So for those of you that don't know how to use commitment of traders report, one easy way to do that is to see the green and red lines here. The red line you can see here is commercials, merchant, professionals, blah blah blah. It's big big traders. Let's generalize it. And the green line is large speculators, usually representing retail investors. So you keep an eye on what's happening with the red line here. Usually what happens is that when the price is going down, right, the commercial traders usually go up. Why? Because they have cheaper price to buy more quantity, right? So this is representing the open futures contracts. So that's the basic idea behind it. So when we see commercial traders going down, that's usually when the price is going up, because they want to buy more when it's cheap, right? So that's how you basically use Commitment of Trades report, but keep in mind that usually this is somewhat lagging. You see here the last update was on 5th of January. So I think this is on a weekly basis that it gets updated. So yes, you can still use it because you get the overall sentiment in the market, right? And I usually use that on gold and crude oil. Same principle. You see the price of crude oil has been declining lately, so you see that commercial traders at yearly highs, right? So that one might say, okay, if commercial traders are buying so much, why is not the price going up? Because crude oil being a commodity instrument is affected by different aspect, not just the contract, the futures markets, right? We have geopolitical tensions also obviously playing a role when it comes to crude oil, and technical image, weather conditions, drilling production from different countries, especially the US and Saudi Arabia. So various factors affect crude oil. Commitment of Traders report, you can use it to get an overall idea of sentiment, but not just rely on it completely, because as I mentioned, it's not fully updated. It's usually lagging about a week. All right, now moving on, let me go through the instrument that you guys requested first before we proceed. Gold, we've covered that. Pound yen. All right. So all the pairs that are traded against the yen is in all-time high periods, right? So you see pound yen, euro yen, all-time high, dollar yen, near all-time high, probably, no, but definitely yearly high, right? So the pairs traded against the yen have more or less the similar setup as you've seen, right? So personally here, same concept with gold, quite risky for my appetite, right? Because apart from the fact that it's in all-time high, it's also the technical image shows that the volatility is through the roof. You see here the orange lines are the Bollinger Bands, and you see where the Bollinger Band is. Let me put my mouse just right. Yeah, you see the orange line where it stops, and see where the price is trading. When this happens, we see that volatility is exploding, right? And I think that's true for all. Yeah, euro yen trading above the Bollinger, dollar same. So we have extreme volatility. We have shifts in Japanese politics, right? You've seen the new prime minister. They are more eager to increase their interest rates, so that directly affects carry trade operations, right? For those of you that don't know what carry trade is when you're borrowing from one currency to invest in another currency. And usually what happens is that traders borrow money in Japanese yen because the interest rate is like 0.5, 0.7. I don't remember what it is right now. And then they buy, for example, the dollar, where the interest rate is 4.8. So you borrow with a 0.5% of interest and you buy with 4 point whatever interest. So that's essentially carry trade, and that's why the Japanese yen is under so much pressure, because now carry trade operations get affected by this new shift in governance and probabilities. It's not probabilities, there is no tool to track, for what I know, to track Japanese interest rate like the Fed watch for the US. But yeah, that's the main reason behind why we see all these all-time highs or yearly or multi-year highs on the yen pairs. So pound yen, very, very risky instrument to be trading this week. I hope that helped, Lisa. And Euro USD, yes, let's go through that. All right, Euro USD has some pretty interesting setup. Why? Because we had since probably late December, we have a bearish, consecutive bearish with no significant correction phases. These bullish candlestick are not correction. Correction is when, yeah, it goes above the previous bearish candle. So we have consecutive bearish action. We see how the pair in the beginning of this week was already trading even below the lower band of the Bollinger Band. So again, that shows that volatility is it's high on Euro USD pair. But what's important here from the technical perspective is that the price is currently it's not trapped, but for the time being trading within the two moving averages. You see here the green line and the blue line is the 50-day moving average and the 100-day. So this, when the price is trading within the moving average area, is called the dynamic resistance. So why am I mentioning that? Because we've seen this massive bullish candlestick on yesterday's session, right? So one might think, okay, this is a bullish correction, let me buy Euro USD. You can do that, obviously, yes, depending on your style, obviously. For me, I want to see the price closing above this dynamic resistance before I open a bullish trade. And let me explain you why. Because if you've been excited about this big bullish candlestick in the beginning of the week and start building some long positions, you might get correction on these dynamic resistance of the moving averages, because usually it's strong, right? Or at least pushes the price somewhat sideways before continuing to the upside. So you don't want to keep your trade open. For example, if you are a scalper or a day trader, to keep it open for extended period of time. So it might be okay to open a long position here, but for me personally, I want to see the price closing above this dynamic resistance of the moving averages, and then yes, probably we'll start building some long positions. Probably the first target for me might be the 23.6, which is the 1.17, or even higher. But for now, I'm waiting to see today's candlestick, where it will close before I open any trades on Euro USD. Yeah, that's it. My personal opinion. Again, that is not investment advice. All right. Now, what else do we have? Gold, pound yen, Euro USD we've covered. Silver, we've talked about that. Bitcoin. Yeah. All right. Moving on to Bitcoin. Bitcoin, if you guys remember, for those of you that have been following this live brief for quite some time, and thank you for that, right? You might remember my take on early December about Bitcoin price. Someone asked if you believe this is a bullish, the start of the bullish trend, and I mentioned that if I don't see the price close above 61.8 of the Fibonacci, I am not opening any long trades. And guess what? We had some sideways movement with boundaries exactly the 61.8 and the 78.6. So my opinion hasn't shifted from that point in time. Joyce, yeah, you were there, you are a regular. So yeah, my opinion on Bitcoin is still that we will need a major new catalyst in the market for cryptos to see any significant moves on Bitcoin. Currently, there is nothing about cryptos. All of the fundamentals or news that you hear or anything is about geopolitics. So that's not affecting crypto to that extent, right? So nobody's mentioning cryptos for the time being. So that's why for the past probably couple of months we see this sideways movement on Bitcoin. We have some minor corrections here and there that you can trade intraday, but overall there is no major factor pushing Bitcoin or affecting the price of Bitcoin for the time being. You see here even Bollinger Bands, the orange line in 1st of January, which usually beginning of the year, we see some action on cryptos in general, similar to gold, but not to that extent, right? We see some action. We see that the Bollinger Bands are almost closed, right? So volatility is not there to support any big moves, right? Even now that we have some expansion of the Bollinger Bands showing that some volatility is coming back, it's not that great. I mean, look at this expansion. This is volatility. This is just regular sessions, right? And if we check Bitcoin Fear and Greed Index to get a better image on what's happening, you see it's overall crypto, not specifically Bitcoin, is at 41. So that's neutral, right? We don't have any greed or fear or something. So yeah, sentiment is not there, volatility is not there. Glassnode says even worse, it's 29. 29 is somewhat upper boundaries of fear, but still, my point here is that we don't have significant shift in sentiment. We don't have volatility to support any major moves. So technicals does not show anything about a reversal or volatility building up or anything. So my take for the near short term, at least probably for the next week or couple of weeks, we might see some continuation of the sideways movement. If, however, we see a break on 61.8 and above, then we might see some volatility building up, some bullish trend forming. But unless we see a valid break above the 95,000, I don't expect Bitcoin to do any significant moves, right? All right. Hope that helped, Joyce. Matthias says, Katsi, yeah, let's go through that. Looney Frank, let me change the settings here because I don't like to see it like that. If you guys have any more instrument that you want to go through, please feel free. I like to use here the stochastic. All right. So Looney Frank, not very popular. I'm not sure if Matthias, I hope I'm not butchering that name. If you are trading that consistently. So, okay, what we see here is that we have double new highs before the end of the year and then decline to the downside. What I see here that's relatively concerning is that volatility. You see, Bollinger Bands very contracted compared to late December. So probably any trades, any targets that you might see here might take some time to reach those levels. Currently, again, the price is trading in the dynamic support of the moving averages, right? So stochastic is not in extreme oversold levels, is kind of in neutral levels for the time being. Of course, if we see a couple of more bearish candlesticks, these will show extreme oversold, and then probably we might see some bullish correction to the upside. For the time being, the moving averages are validating the overall bullish trend, right? We see that the 50-day is trading above the 100. That shows bullish trend in the market, overall bullish, because we've seen some degree of correction here, but moving averages have not crossed yet. So we're treating that as a bullish trend. So in my personal opinion, I will be trying to get some bullish trades, some long trades on Looney Swiss here. For the time being, I don't see any important or significant setups, right? You see, we have a lot of volatility intraday. You see these big wicks and tails. We have a big volatility intraday, but very small change in prices. So for me, it's not my style. If you want to go to lower time frames, probably, I don't know, an hour, and try to find intraday some entry points, yes, you can do that. But my style is more long term, so I wouldn't be trading the Looney Swiss franc because to get significant value out of your trades, you need to keep monitoring it intraday to get to catch this intraday volatility. For the time being, for me, I would be waiting to see if the price breaks below the dynamic support, of the 100-day, and then probably wait for a reversal pattern, probably at lower levels, probably around 57 cents or something, 57,200 probably, or if we see a break above the 50-day moving average and also the area of previous price reaction here around 57,800, then I would be start building some long positions. But given that volatility is so low and we have some sideways movement, these levels might take some time to reach to get the validation that personally I want to see. So yes, I hope I helped. If you want to trade that, you can do that intraday, or you can wait it out and see if it breaks those levels that I mentioned. All right. So what else do we see? You've been hearing me this whole session saying we have all-time highs, stay away from this, stay away from that. Okay, so what are we trading this week, right? Okay, we have one interesting setup that I found is Euro British Pound, where currently we see a retest of the support of 38.2. We might see some trading intraday below or just above the 38.2. What I would personally would like to see is the next candlestick or next couple of candlesticks rebounding above the 38.2. So probably I might start building some long trades on euro pound. This is very risky, by the way, because we have a bearish trend, and I'm talking about opening long positions. So my take here is that, first of all, the 38.2 of the Fibonacci has been a price and an area of price reaction. Previously, you see here how the price rebounded from the 38.2. We had some difficulty in breaking below and eventually staying above that. So probably we might see the same happening this week. Of course, on Friday, as I mentioned in the beginning, we have the British GDP coming up. So if you're not, if your risk appetite is not that high, you might want to see the publication in Friday on Friday morning before you start building any positions on pound yen, on pound, sorry, on euro pound. But it's an interesting setup. And volatility is there to support. You see Bollinger Bands are quite expanded. Stochastic might be continuing into extreme oversold levels, so we might start thinking about building some long trades here when conditions are ideal. The moving averages here are a concerning factor because if it crosses below, then it might, if the green line crosses below the blue line, for the time being they are just touching, but it might continue to the upside. If it crosses to the downside, then the long trade might not be ideal, because that means that there is some room for bearish action to the downside, probably reaching the next Fibonacci level here at 86 cents approximately. All right. Let me know, guys, if you have any more instruments that you want me to go through. There's a million stuff that we can go through right now, but I don't want to use your time beyond what's expected here, around an hour, so you don't get too bored with me. All right. So yeah, let me know in the comments, guys. What are you trading this week, or what's your style, what's your instrument, your go-to instrument that you usually go to. All right. In the meantime, let me, guys, show you some social media that you can go to keep up to date. You can go to Exness's Twitter account. We're quite active there. Let me show you the account. You can see we post there multiple times within a day with different charts. You see here silver, gold, pound USD, oil, all within today, right? Already. So yeah, it's quite active account. You can follow. You can get an idea or some small brief analysis on different instruments throughout the day. You can follow my personal account on Exness. This is my username here. I almost every single week I post, and I say almost because some weeks I'm off or sick or whatever, but if I'm alive and working, all right, or every single Monday I am posting about gold and crude oil, right? Every single Monday, sometimes other instruments, but every single Monday I post about these two instruments. So if it's Monday and you're not sure what to do, trade or what to do, you can read my analysis here and get an idea on what's happening with crude oil and gold every single week. All right. Also, you can find some educational videos on YouTube. If you go on Exness account, you can find podcasts that we do. You can find some playlists here. Board Trade podcast, Trading Talks is also a podcast to get an insight on some definitions that you want, or some concepts that you want more details about. We have also weekly market outlook. Weekly market outlook, it's a video that we do every single week about an instrument, right? And we give our personal opinions, not investment advice, on some instruments every single week. For example, we have dollar, yen, silver, Bitcoin. You see, every single week is a different instrument. It's a trading idea with targets that you want to, that you might use. For example, you see gold could bounce and retest 4,150. I mean, it's a trading idea with potential targets that the price might reach, and an analysis behind it on why we believe that gold might go to this level, or yen at this level, or whatever instrument we're talking about every single week. So Mondays you can check my profile on X. Tuesdays or Wednesdays, usually is on Wednesdays, we publish the weekly outlook, so another trading idea there. And you can follow Exness on Twitter to keep up with what's happening Wednesday onwards, right? So you are pretty much covered for the whole week if you follow our channels on social media. You can find us also on Instagram, on Facebook, YouTube, anything that you can think of, we are there, right? So and also you can get some educational content overall in our YouTube channel. There's a lot of content there that you can use, learn, comment, ask a question, suggest something, or whatever you feel writing about. So yeah, I think that's it for this week. I want to remind you that earnings it's happening this week. We also have, if we go to next week, also we have big companies starting to release their earnings. We have Netflix on Tuesday. If you're trading that, Johnson and Johnson, Charles Schwab, another big bank, Procter and Gamble. So yeah, earnings season is kicking off. If you are following any individual stocks of big banks or big companies, or any stock, you can head up to Nasdaq calendar and check this out. Or you can go to, if you're using trading economics, you can go to markets and select earnings, and then impact 3 stars. So we get big companies, everything is there. You can find that as well. You can select the period that you like, or anything like that. Okay, so I think we're pretty much it for this week. Hope that everyone is with us until the end. Hopefully you found something interesting and I didn't bore you too much, right? So yeah, give us a follow on our channels on the various platforms. My colleague Michael will be here for next week's live brief. And yeah, thank you all for attending, and hopefully see you all next week. All right. Thank you very much, guys. See you all. Bye bye.